Good morning. It's Monday, April 28th. Thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So the primary focus for not only the U.S. equity markets, but precious metals and all commodities across the board is really going to be three factors here. It's going to be earnings, data, and trade negotiations. Looking at the markets here, stocks are slightly lower after last week's gains with no major tariff developments over the weekend. We have a huge week for earnings, and the general mood of the market remains cautious. So looking at the S&P 500, down about 17 points, 55.33 last. High of the overnight session, 55.49 and a quarter. That's been a resistance point. We finally broke through the 5,500 level. We're starting to work our way up. The next logical resistance point is up near that 5,700. We'll want to see how 5,500 holds, but again, it's going to be a very busy week here, and the general mood in the market again remains cautious. So looking at the NASDAQ, it is down about 60 points right now at 19,477. The low of the overnight session, 19,392. Again, it's mirroring the S&P 500 down about 0.33%. Now, Treasury Secretary Bassett said on Sunday that some tariff negotiations with Asian countries are moving very well. He will be joining CNBC at 7 a.m. Central. They keep showing that box in the lower right corner. Now, looking at the recovery and some of the discussions we've seen in the markets here, the S&P 500, it's month to date from the 14% drop we saw. It is now retraced back only down about 1.5% as of Friday's close, and it's one of the best rebounds we've seen since 1950. Now, looking at the earnings coming out, it's going to be 4 of the Magnificent 7. So you got Microsoft, Apple, Meta, and Amazon all reporting on earnings out this week. We'll have a ton of economic data as well. So the main economic events come later in the week, starting on Wednesday, where you got GDP, PCE, and then you get the ISM data on Thursday, and then the April jobs report on Friday. Now, looking at trade negotiations, the Trump administration said that they're working on bilateral trade deals with 17 key partners, drafting a framework to handle the negotiations with about 18 different countries. That news came out on Friday just after the bell, and what we saw was U.S. equity markets, they did march higher on that. Now, looking at the precious metals markets here, kind of a wild ride overnight, about a $70 range of the gold market, with gold futures up about $1.70 here, trading right at about 3,300. So we've been coming down into this 32.70 to 65 area, and we haven't really broken that area, and we haven't really tested it where we traded at around that area for quite a while. Remember, that was an old resistance point that took 3 days to break through before we saw that move on up to the all-time highs. Now we're coming down to that level, but it's just mild support, not super strong support, because of the fact that we just don't have enough back-tested data at how the market had responded around those levels, and that's one key thing to watch here. Now, if you look at the gold futures, again, about unchanged on the day, 3,300. In the CFTC position, this is a little bit alarming out here, and I discussed this last week, and even Goldman Sachs highlighted it in a report. They're talking about hedge fund managers cutting their net long position in futures and options to the lowest level in more than a year. That's coming from the CFTC data. Now, gold futures are up about 25% year to date, outperforming nearly every major asset class out there, but it's been fueled mostly by the trade tensions. There are 3 main drivers that you want to keep an eye on here if you're trading in the gold market, and it's really the ETF flows, the central bank buying, and then the speculative demand from China. So remember, what we were watching for a while was the overnight price action. Much of this $100 move that was occurring was happening in the overnight session, and that was that speculative demand coming out of China. So we're going to want to see that type of development come, because if that starts to come out, it's almost one leg out of the 3-legged stool that they're kicking out. Central bank buying, yes, it's there, but are they starting to look at other asset classes? Perhaps. If we start getting these trade deals going on, you could see foreign flows back into the treasury market. So we'll want to keep an eye on interest rates as well. Now, the ETF flows, we'll get into that in a moment here when we look at that breakdown here on a daily basis of the positioning in the ETFs. But one story that I read over the weekend here, it talks about hedging, and it says despite the rally, some market watchers are cautious due to the shifts in option positioning. So if you look at gold options here, and this isn't a recommendation, this is an observation that I'm taking away from reading a lot of different stories over the weekend on the precious metals. It's saying that hedging against declines are near its lowest level since August, and implied volatility has been surging. So Barclays, what they were doing is they were saying gold is kind of running ahead of its fundamentals, and they recommend zero cost risk reversal trades. Essentially what they're saying is they're selling call options and they're buying put options out there, expecting gold prices to pull back. So it's a covered call strategy with a protected put is what they're looking at doing here. So not something that you just want to jump in and apply. It's something to think about in your risk management process that you're doing. Now looking at those ETF flows, and this is where I'm really watching, because again, we said there are three main drivers on the gold market, is the exchange traded funds. They cut 175,000 troy ounces of gold holdings from the last trading session. This brings this year's net purchases to 6.3 million ounces. It's the fourth straight day of declines, and it is the longest losing streak since November 18th. That was right around election time, things like that, where we saw a big outflow out of the gold market here. Now, what you want to watch is, again, that rate of change on how it is coming back. Are these traders getting out of this market, and where are they going into? So they also cut, and this is a big cut, 3.03, so 3 million troy ounces of silver from their holdings in the last trading session, bringing this year's net purchases to 12.6 million ounces. Biggest one-day decrease since March 26th. So people are really starting to kind of throw the towel in on some of these metals markets. But if you look at some stories that we talked about in the developments with the silver market, is usually what happens here. And again, this is past performance, not indicative of future results. But when you go into some of these crises where gold futures have peaked in the past at different price levels, you look at COVID, you look at the financial crisis, you look at other different crises out there that have occurred, gold futures tend to peak. And then what happens is you get the unwind, and they go into the industrial metals, and the industrial metals take off from here. That's why we have elevated price targets here on the silver market. Now looking at those year-to-date percentage changes on the ETF precious metals holdings, gold up 7.6%, so another big downtick, and then silver up 1.8%. That's another big cut in that market. So you look at last week's changes, and that's also something that I monitor over the weekend from a week-to-week standpoint, because if you miss what happens on a day-to-day, at least you can look and go, hey, what was the broad measure that we saw in the gold market in those ETF flows here. So the ETFs, they've reduced their gold holdings by about 353,000 troy ounces. You look at silver, they reduced those holdings by 4.75 million ounces. Now where they went to was they increased their platinum holdings and they increased their palladium holdings, because a lot of this discussion has been around automotive tariffs and things like that. And that's been one of the main drivers here of platinum and palladium. You look at the gold silver ratio, no real change here from Friday at 99-1. And then you go to the silver futures. Well, silver essentially unchanged, down about 5 cents. It's had kind of about a 50-60 cent range overnight, 33.16 and a half, low 32.58 and a half. We'll want to look at some of those key levels there in the silver market. $32.99 trading last, so call it $33, and again, essentially unchanged. Now, silver futures, they did advance about 1.7% last week, and it was the third straight week of gains in the silver market. So it is showing that resiliency because of the ongoing industrial demand, along with that safe haven status. But as the safe haven status fades in the gold market, they'll start focusing on the industrial demand. So you look at copper futures, copper slightly lower, down about a quarter of a basis point at 488. 492 was the high, 482 was the low. So about a 10-cent range, which is a pretty decent range. Remember, they have a micro copper futures, $25 per every point. And then they've got that larger one that's 250. Kind of a bit of too much volatility for many people out there given their account size, but that's something you want to review and reflect on your own. You look at copper inventories in Shanghai, they saw a record weekly drawdown last week. So big demand on the China front here, and Chinese officials have reiterated plans to step up support of their economy in face of those external challenges, including a potential collapse in exports to the U.S. as U.S. authorities are fully confident that they will reach an agreement here with China. And China does have a growth target of 5%, which they are wanting to really hit here. So they were throwing out different ideas as far as different supports that they can implement in their own economy in order to prop that economy up and achieve their 5% growth target. So if they could do that, perhaps you could see copper futures take out that $5 handle and move on up from here. Looking at the outside markets, about a dollar range, $1.50 range in the crude oil market. There was an explosion, Straits of Hormuz, that looked like something like that blow up that happened in Beirut, where it was a port. It was a warehouse or some kind of facility that blew up. We saw quite a bit of a rise in the gold or in the crude oil market on that Sunday night open, and then it gave up some of its gains with the U.S. equity markets. You've got all the grains under significant pressure here this morning. Could be some favorable weather, things like that coming out. Could be some discussions with the trade tensions, and then you also have Bitcoin futures 96,265, so kind of pushing on up. Dollar slightly higher, euro slightly weaker, 10-year treasury yield slightly higher, so the future's just a bit weaker. So that's kind of your broad-based range here on what's going on in these markets. Big setback in the sugar market, and that's quite unfortunate because it looked like it had a double bottom or a triple bottom on the charts and was looking to move up. So 2% move lower in the sugar market here, so we're going to want to take a look at that one as well. Perhaps options trading in the sugar market could be favorable given the setback here and against those key levels. So it's something that I'm going to look at here. Again, not a recommendation out to the public. But if you guys got any questions, give us a call or shoot an email to info@bluelinefutures.com. I'll be sending out an update chart pack. We wanted to let some of the markets kind of settle down just a bit here and come out and close out the week here at some key levels. So we're going to review those with the team, and then we are going to send that out here at the levels that we are identifying as support resistance on the chart. So be sure to register for the chart pack in the description below. Now remember that futures and option trading, it does involve risk loss, may not be suitable to all investors, and I'm gonna try and get some things behind here. Brought the chair back in and got a real nice office set up over here, but nothing behind me, and it's kind of distracting if you ask me. So have a great day. Be sure to register for the chart pack, and remember, futures and option trading does involve risk loss, may not be suitable to all investors. Good luck, good trading.